Are you serious? Are you serious? Folks, you are at the right place today. Facebook falling. It's almost like free falling. Seriously, we don't know what's going on. Well, maybe we do know what's going on, and that's why today you're at a great broadcast. My good friend Robert Kudla is here from TradeGeniusAcademy.com, and he may have the answers for us to what's happening at Facebook and this meltdown. I mean, wow. I think they lost over 7% of their total value yesterday, and it's around 2.5% to 3% today. We'll see where it closes. But Bob, great to have you on the broadcast.
Hey, Paul, thanks for having me. Yeah, I mean, the old Chinese proverb, beware of living in interesting times, It's pretty wild out there right now.
It really is. And when we look at all of the market, when you have giants like this, Facebook, it's almost like you and I were talking before we came on the air here, Facebook, Apple, Netflix, Google, Amazon, and Microsoft. It's almost like these guys are too big to fail. Is that possible?
Yeah, this is what's been happening. So our stock market indexes are what's called market cap indexed. So the bigger the stock is, the more money flows into it, the higher the index goes. So it's not like a 1-for-1. So it's market cap weighted. So the algorithms figured out that if money pours into just the top stocks in terms of their size, they can make the averages look really good. And what people don't realize, we're pretty close to all-time highs, but less than, I think, only 62% of the companies in the stock market are above their 200-day moving average. So it's not a healthy market, but it looks healthy because of these stocks. And we were talking before we got on the air, the FANGums, the Facebook, Amazon, Apple, Netflix, Google, and Microsoft, that their market cap is bigger than most countries in the world. And so, like the central banks of Switzerland and Japan, and probably the United States, but they're probably doing it in a hidden fashion, are buying these equities. And so it makes everything look like we're good so people don't get nervous about what's going on in the economy. And but then Facebook goes ahead and shoots itself in the head here with this with these revelations. And the ironic thing about this, Paul, it's always so funny. It was the Trump and the Russian collusion, and it's going to turn right back around on Hillary and the Democrats. The Facebooks of the world were talking privacy. Excuse me a second. privacy. And they turn around, and then I don't think people really realize that the level of the invasiveness of the data in which Facebook has about you. And that you ever get that weird feeling like, I think somebody knows what I'm thinking? Well, now they know, because they've been mining this data, and they've been selling it for years at a level people just probably didn't even grasp consciously. Even though people sign away their rights, I don't think people really realize it. And I think it came to a collective consciousness today, because they were trying to blame this thing. They thought maybe this could be a Trump thing, and then they turn around and find out it's a Facebook thing. And now they're in big trouble. Europe is going hard privacy, and June or July, Facebook and Google, those companies will not be able to know anything about anybody without express written consent. And the United States is going to start backlashing this stuff too. And they just handed Trump the biggest gift in the world.
Now, let me ask you a question. Okay, now, so that most people out there, they don't know what Facebook has done. They're trying to understand what is it they did? What did they do to us that is so wrong? And so explain that to us first, Bob.
Well, see, Facebook is that you have privacy settings in Facebook. And so don't bother me to all the way to, you can take everything that I post out there and use for marketing or customer service purposes. But they also have ways in which they can get you to say yes without you realizing it. They offer to give you a test or a quiz or whatever, and in that boilerplate language, you sign away your privacy rights. So it's a thing called psychographics, Paul, where they're able to then get a psychological profile of you, but not just you. They're able to then put algorithms together in machine learning, and they get to take a look at all your friends. So even though you gave permission and I didn't, if you were my friend, they're able to take a peek inside underneath my tent and start getting data about me as well.
That sounds like, Bob, that sounds like the FISA court, what they did to Carter Page. And then everybody Carter Page talks to, they then can listen in and follow that individual without them even knowing that they're under electronic search and seizure. Is there a lawsuit? I mean, is there a mega class action suit coming against Facebook?
You can almost count on it. You can almost count on it. I don't think people realize the level. But worse for Facebook, because usually they can buy off the lawyers, worse for Facebook is that this just gives the government now an opportunity, a government that, when I mean government, I mean the Trump administration, an opportunity now to get a little payback on these guys, because Google and Facebook and et al. Have not been very friendly to Trump and allowed a lot of things that weren't true to be posted, and yet they talk about, them being fair and unbiased. Federal Trade Commission's already now knee-deep into this, Paul. And I wouldn't doubt for a minute that FCC comes in and says, "Hey, maybe this is a news site. Maybe we got to, investigate." And then Congress is all over this now too. So Google and Facebook, I think, are going to come under, and for that matter, Twitter are going to probably come under some pretty decent amount of heat here over the next couple of months. But how that affects us, because we could say, "Hey, little Schadenfreude, bad on you, you guys are big elites." But the problem is, if those 3 or 4 companies' stocks go down, Paul, it could bring our stock market down 10, 15, 20% in a blink. Yeah. Because they carry that much weight. And so that's why it's important. And that's why we're talking about it today.
Well, folks, we got Bob Kudla. We have the expert who can help us understand. Bob Kudla from TradeGeniusAcademy.com. And of course, he's really on top of it. He's the expert of the market, not just the stock market and what's going on in the trading there on Wall Street, but on the cryptocurrencies and precious metals and everything else. And I think you just hit the nail on the head, and that is, these guys may be too big to fail. I mean, they can't come down too hard on Facebook, Google, and Twitter and these guys, because if they do, I mean, they could shoot themselves in the foot, shoot the entire country's economy in the foot. So there's going to be some pushing and shoving and penalties and readjusting on privacy laws maybe that protects us a little more, but at the same time, we can't crucify them, right?
Well, I mean, that's probably what the people that are in New York and Washington are probably thinking. But sometimes this stuff gets a mind of its own, Paul. And we're time for a shift anyway. These tech booms run about 10 years and roll over, and so money's going to start leaking out. What you're going to start hearing more and more is my data. How the women always say, "My body, my decision," right? Right. It's going to be my data, my decision. And you're going to start seeing these calls for decentralized ownership of data. And that fits right into what's happening with cryptocurrencies. That's why we're jumping up and down so much. It's fun to trade these. It's fun to make money on them, and we do. But it's going to change our life, Paul. The decentralized aggregators, Google, Facebook, Twitter, the government, the banks, they're all in trouble. And people are less and less comfortable with their data being centralized. And so when you can encrypt your data and you can decentralize it, and then you choose who sees that data, when they see that data, how long they see that data, and for what purpose, that's going to blow people's minds. And there's coins and tokens in the crypto space all around that right now, Paul, that are in positions to take advantage of that. And you can see, look, today, I mean, Facebook started to fall, on when this stuff came out this weekend, cryptocurrency started popping on Sunday. Today they popped again. There's a recognition out there that this whole technology is going to be where money is going to move. And the same with gold and silver. The banking system is fraught with corruption because they have the ability to just take unlimited dollars from the Federal Reserve, your and my tax dollars, and make speculative bets and suppress gold and silver. Well, when all that stuff moves to what they call the blockchain, these decentralized databases, you have to be invited in to trade them. You have to have an ownership stake to trade them. And so the banks can't come in there and sell something they don't own.
Right.
And that's how they've been suppressing things. So this is great news if you're a producer, if you're a content person, if you add value, or you just value your liberty and your freedom and your privacy. The future is bright in that regard. It's just that the parasites aren't going to go down easy.
Yeah, it sounds like they'll probably put some new settings at Facebook that says all the content is no longer, because originally Facebook said everything you post is theirs. Well, that's going to change. It's probably going to have settings that says, okay, all your content is yours. Click which button you want to allow for marketing, allow for data mining, or, just pick the button you want to limit the amount of your data can be used. So they'll probably have to institute whole new settings and situations to protect the consumer, which would be the general public, everyone that's on Facebook, Twitter, or Google, or YouTube, or anywhere else. It sounds like that's what's going to happen. You're right. That's going to be better. Now, I don't know what that will do to censorship, because you still got the media running around hollering fake news, fake news, fake news is us, the alternative media. Yet I see all the fake news coming out of the mainstream media. I don't know what that does, if anything. Maybe it doesn't change much there or not. Or maybe it helps us. I don't know. But, Bob, we're going to see some changes. And speaking of changes, Bob, at your website, which is, of course, powerful place to learn about all of this stuff, and that's what you do, is you teach people what to do, how to trade, how to get involved. You're a good Christian company, great guy to work for and work with, and for people when they get there and work with you and work for you, and you work for them to help them out there in the market. You've got a big sale going on through Easter. You want to tell us about that?
Yeah, so everything we have in our store, we threw a 50% off sign on there, Paul, and we aptly named it Easter for your listening audience. And so if they go to our website and they decide to select one of our options, they can just put the promo code Easter on there, and they get 50% off, and it's good till the end of the month. And so I encourage people to do it. We're definitely helping people make money nearly every day in this market. We're going to help people transition from where we think the money has been or where it's going to go. And, there's a bull market somewhere always, Paul. And, we're Wayne Gretzkying it. We're trying to go where the puck is going. And and we have some pretty good ideas as to where the money's starting to flow.
And speaking of that, you talked about the banks. And you talked about the Fed. Tomorrow, I guess the Federal Reserve is going to have a big meeting. And do you anticipate interest rates being bumped up a little? Do you see any major changes? What do you think is coming out of this meeting tomorrow?
Yeah, so the Federal Reserve they're on two paths right now. It's the same path, but they have two levers they're pulling. One is that they're selling back the assets they bought since 2009, and that's not changing. And I shouldn't say they're selling it; they're just not buying more. And as the ones they own expire, they're just not renewing them. So that'll lift interest rates up on the short side. At the same time, they're calling for 3 to 4 interest rate increases in 2018. We're 2018 or we're 2019 already. Gosh, 2018, and they're going to raise rates this time. It's the guy's first meeting. He's not going to punt. He's going to show that he's a bit of a hawk. I don't know what his language is going to be like, but they said there'll be 2 or 3 more after this. My personal view, Paul, is this is probably going to be the last rate increase they're going to be able to do, because they'll force the economy into recession by summertime.
Yeah, especially if Facebook takes too big of a hit, or if Google also takes a major hit, or even Microsoft for that matter. If these big tech giants, if 2 or 3 of these guys take too big of a hit, that drags the whole market down. the last thing you want to do is then also increase interest rates, because then you start really affecting Main Street and the housing market. I mean, I've been hearing people say, look, the housing sales really kind of went down, got real soft in February. And I don't know what that means. Raising interest rates sure doesn't help that, does it?
No, and the auto industry is same, and the credit card delinquency rates are up. And what people don't realize is a lot of these companies borrowed money to buy their shares, to keep their share prices up. Well, they borrowed it with short-term money. So when they have to roll over those loans, Paul, to pay them down, they're going to be, sometimes those interest charges are going to be twice what they were when they originally borrowed. So companies are going to become less profitable at the same time. And as you raise interest rates, it's going to make the dollar stronger, which hurts our exports. At the same time, President Trump is putting tariffs everywhere on the Chinese and on the Europeans. And don't get me wrong, I don't disagree with his approach. It's just that it's going to be painful. And so when people start doing the math and they're saying, okay, the consumer has less money, companies are not as profitable, why am I at all-time highs in the stock market? And then what happens then, the stock market rolls over, and when it rolls over, people get scared. And when people get scared, then they stop spending. And you know the end of that song. And so that's why they have to be very careful how they thread this needle. And I'm sure nobody anticipated this Facebook thing to explode. But all that tells me, Paul, is that I think there's enough people ready to sell the stock market that they jumped onto it as an excuse. And that's not a good sign.
No. So what do you see while this is all taking place? I mean, the Mueller investigation, and going after Trump, the Russian collusion, confusion. There is no collusion. Instead, this seems like a witch hunt. I think Trump's getting pretty irritated and frustrated, and like, how long are you guys going to go on with no proof? And does that affect what's going on in the markets? Because simply, doesn't an unstable or instability in the government also affect people's mindset when it comes to market?
It hasn't. I think the smart money has looked past that. They know the Russian collusion is an illusion, and I think people have now gotten a pretty good sense of kind of how Trump operates. He's very transparent. And he's very vocal. In a lot of ways, people like that because they kind of know, where he's thinking, as an end game. Now, the sausage he makes is a little scary sometimes, but people know where he's going with this. There's no confusion as to, he basically is doing what he says he's doing. So that gives the market comfort, believe it or not. And look, I don't think it's going anywhere. I think the market will tank hard if the Republicans lose the House or Senate. Then we're gridlocked for the next 2 years, and then whatever branch of government, the House or the Senate that goes Democrat, I mean, they're just going to drag hearing after hearing after hearing, and I think that would destroy the economy and destroy the markets more than what Trump is doing. So I don't think so.
That's a great point. That's why, folks, seriously, you better pray that and get out and vote at the midterms that the House or the Senate doesn't flip and go blue, because then you have total gridlock. Here's another question for you, because during all of this, what about this tariff? Okay, so the president looks at this situation, says, hey, if you're going to truly have a strong military and have a strong industrial backbone, you got to control your own steel. Okay, it's you got to control the steel. So he throws out this 25% tariff and 10% on aluminum. How do you see that affecting the market? Is that a positive move long term for the American steelworkers and for the American economy as a whole? Does it affect the stock market? I mean, what's the story here?
Yeah, so let me answer that by giving a little background. So you get a lot of pushback from people saying this is what Hoover did. We got Smoot-Hartley, caused the Great Depression, yada yada yada. Number one, the Great Depression started before those tariffs went into effect. Number one. Number two, in 1929, we were the China of the world. We had the surplus on trade, and we had a surplus in our government. Now we are the largest debtor, and we're the largest trade importer. So for us, we're really in a no-lose situation. We're kind of similar to where Great Britain was at this time. Great Britain had some instances where their real estate was actually higher at the end of, during the Great Depression than most countries when they went in, because they were able to just trade inside of their own union. Well, the United States is a union of 50 states and a number of territories, and only 12% of our GDP is governed by trade, Paul. So we can go hard after these countries and get better deals for ourselves with very little risk to our economic output or our GDP. And it's Germany and Japan, Korea and China that have a lot to lose. And because everybody's focused all their exports onto us, and he's going to change that. Now, regarding what you talked about, steel, aluminum, and also intellectual property, Paul, these tariffs he's putting against China now are basically to prevent China from just basically acquiring on the cheap, our high tech, businesses that we still have here, and so he's cutting all that off at the knees too. So, and this has a conveyor belt effect. If we slow China down, China buys less from Germany, you know what I mean? And so, and on it goes. And for us, we're like, okay, we're 12%, China, you're 40%, Germany, you're 35%. You see where this is going.
Yeah.
Those countries are in a world of hurt, not us. We can actually disconnect from the world. And the biggest thing that we're affected by is some what they call strategic metals. That's the only area that we really have to push come to shove, have to acquire. And and most of those are in Canada and in Africa and some in Russia. So yeah, to me, I'm like, bring it. Let's do it.
So, and that's what I was trying to tell folks. And that's a great analogy you just gave. And that is Trump, all this whining and crying by the media and even the United Kingdom, putting a tariff on Harley Davidsons and blue jeans and Kentucky bourbon. I mean, seriously. That's not going to have anything. That's a pimple. Okay, that's nothing. So what you're dealing with here is the big steel manufacturers. What Trump is doing is he is going to carouse the market. He is going to do it. He can't lose. That's why he says you can't lose this. The little tariffs that get thrown on here just as irritation from countries who are just crying, that has no effect really long term. And so the move Trump is making is a power move to really strengthen the United States manufacturing base and the intellectual property base. And you're right. That is a great analogy. And folks, seriously, this is why I think we elected him to be the president. We were tired of the global elitists, Bob, selling our country out everywhere we turned, selling our country out. It's about time that we pull some of this back. And that's why Bob is here. TradeGeniusAcademy.com. TradeGeniusAcademy.com. Go to his website, check out the programs he has. You've got a intermediate binary program. Tell us about that, Bob.
Yeah, that was great. And I spent a lot of time today trading, and actually, when binary trading is kind of like, if anybody ever played like sports, is it are they going to finish 50 points or higher or lower, or is Alabama going to win or lose? Is binary options is kind of win-lose trading, and you can trade it across a lot of commodities and also the stock indexes. And what I really like about it is that it's a high reward for the amount of capital that you put in for the trade, and we simply use our same signals and algorithms that we use for trading the stock market or the futures market, and we apply it to the binary trading market. And you could put $50 bet on and make it turn it into 100. You could put a $20 bet on, turn it into 100. And you can also just take little trades all day long. And so people that are trying to build a portfolio up, it's a really good thing to do. And the other thing too, Paul, is that we have a lot of what we call tips and tricks. Like we know, like the day before a Fed meeting is don't go long gold. Okay. So, so we help people get on the right side of the trades. On Fridays, you don't short oil. And just knowing that gets you halfway there to a profitable trade, just knowing which way to bet the direction. And so those are the kind of things that we help people out. So you can join that service. You can join the cryptocurrencies, and even the cryptocurrencies now have some binary options associated with it. Or you could trade stocks, and you could trade options, you could trade futures with us as well. So we have a pretty good mix of services, and you can start with a couple $100 and start trading that way and build your portfolio up over time. And binary options and cryptocurrencies are a good way to do that.
Sounds like that binary trading sounds almost like day trading, like safe day trading. It's kind of
I wouldn't call it safe day trading, but it's low cost day trading where
yeah.
If
Low
you're wrong,
entry
you're not
fee.
losing a lot of money.
low entry. Okay, so keep it low. You can't get hurt, and you never know. You may be investing in the right companies that are getting ready to have a good day, and you never know how that could wind up for you. I've been watching some of these situations in our nation. Where's the dollar at right now? And there's been talk of Trump likes the gold standard. I mean, he's not the first president that wanted to go back to gold standard. What would that do if he did it?
Oh, I mean, that would be it would be precedent setting. It would send earthquakes around the world, but China would probably be ready for it and Russia, they've been buying a lot of gold too. Is that it's hard to say with the dollar. They've been trying to push the dollar down, Paul, but we think the dollar might be ready to really pop here. So we don't have a really good feel for which way it's going to go. It all depends on the more they raise interest rates, the higher the dollar will go. So I think it's really a belief around that. Number one, and number two is the less trade we have, Paul, with the world, the higher the dollar goes as well. So we're not quite sure. Some of the end games with these tariffs, is it to protect the dollar as well? Because when you trade a lot and you have a lot of deficit spending, you got to push a lot of dollars out of the treasury overseas. But if you're not trading a lot, you don't need as many dollars, and dollars become more valuable. So there's a lot of cross currents right now. And you can put 20 people in a room, and you'll get half. It's kind of divided right now.
So what about quantum easing? Are we still printing money as fast as we can turn the machine on, or are we backing down on that now? Because Obama was
calling it quantitative tightening now, Paul, because the Federal Reserve is rolling off their balance sheet. They call it. So they're not buying bonds, or they're not buying mortgage-backed securities like they were. They're actually taking 10 to 20 billion a month off, because we got up to $4.4 trillion, and they're trying to it's called draining the liquidity from the banking system. So in other words, it's just less speculative cash out there. So they call it quantitative tightening. Even if the Federal Reserve does not raise interest rates anymore, but they continue down this path of reducing their balance sheet, it's like giving an interest rate increase without changing the short-term interest rate. That's why the 2-year yield has moved up so high, Paul. The Federal Reserve doesn't touch the 2-year yield. They touch the shortest yield out there, and they try to influence those other yields. But quantitative tightening affects the 2-year, the 5-year, the 10-year, because the funding costs are going up because the banks don't have access to 0.5% money anymore.
Folks, this is amazing information, Bob. I mean, you really are breaking down some expert information for us as it relates to currency, cryptocurrency, U.S. dollar, gold markets, the stock markets. Facebook is falling. Yes, they are. And do you see Facebook continuing to tumble the next few days, or do you see, is somebody going to stop the bleeding here?
Well, I don't know if somebody will stop the bleeding, but if it's fallen 10 or 12% here, and so you get what they call relief rallies, or people call them dead cat bounces, where the people who have been shorting Facebook will want to take a profit, and that takes the pressure off the selling, and you can see Facebook jump $15, $20 here in the next couple of days. But having said that, a lot of people that I've been talking to think Facebook will end up around $145 a share, and I think right now it's dabbling in 160s area. I don't trade that per se. I just looked at it today because 2 days in a row that it really started to sell off. So I kind of asked around, and that seems to be the consensus that it's probably going to, after this push up higher for a relief, it's probably going to fall down to 145. And if it does that, I think the market kind of goes with it. I'm looking for the stock market to go down to 2,400, 2,500 before it tries to make an attempt at a new high again. So I think the techs are going to be under the gun here a little bit, Paul, next 60, 90 days.
Folks, this is Bob Kudla, TradeGeniusAcademy.com. That's TradeGeniusAcademy.com. A good guy, Christian company, a great man, really loves people and treats people right. That's what I really like about it. I met Bob, had lunch with him, and really like his approach to being fair and trying to help people along. And he's got a great promo going right now. Just go simply to his website. The promo code is Easter, and you get that 50% discount the rest of the month. I think that's great. So again, Bob, I appreciate all the expertise, all of the great insight that you're giving us here today. And we just want to encourage everyone to go check out your website over there at TradeGeniusAcademy.com. You got the final word.
No, just thank you. And those who are gold and silver lovers, I think our day in the sun is coming as well soon too. So stand by on that. Maybe it's something we can talk about next month.
All right. Very good. Very good. Well, may you and your family be blessed. Bob, we appreciate it greatly that you come on to be with us today. And everybody watching out there, thank you for being with us in this broadcast on the coming apocalypse. God bless.